Hello and welcome to another edition of BullionStar Perspectives. My name is Ronan and today we're delighted to have with us Keith Neumeyer, who is the CEO and the president and the founder of First Majestic Silver. Good morning, Keith. It's great to have you here.
Hi, Ronan. It's great to have you for the first time on a
Yeah,
call.
I've been meaning to line you up to have a discussion, so I'm looking forward to our conversation. Would you be able to start off by just giving us a little bit of a background about First Majestic, what countries you're operating in, the different mix of revenue between gold and silver, and what are your plans in store for 2022?
Okay, well, I'll try to do that as quickly as possible. It's a bit of a long story. We're 19 years in. I put the company together, really to focus on silver in Mexico. Mexico is the largest producer of silver in the world. And I put together a team and, of course, the capital to fund that process. And, by 2004, we bought our first mine. And actually in 2004, we produced 25,000 ounces of silver that year. Not a lot of silver, compared to what we're producing today, of course, but it was nice to finally get into production after a couple of years of work and looking for assets and then building out, or at least cleaning up a mill that was otherwise shut down 5 years previously. We just started on it and just continued a very aggressive campaign of acquisitions. By 2006, we had 4 mines. And we were producing, by 2010, we were producing a little bit of gold, quite a bit of silver. We were about 70%, 75% silver back then, but we're also producing lead and zinc. Or as the portfolio changed and as we bought other assets, we bought the Santa Elena mine in 2015, and we bought the San Dimas mine in 2018, and that really switched the portfolio to much larger assets, which required a lot more management's attention. And we started to realize that operating the smaller mines really wasn't making the same sense as it did previously when we were a much smaller company. You have 500 people producing 1 million ounces of gold, or pardon me, 1 million ounces of silver, and you got 500 people producing 5 million ounces of silver. So you might as well have the bigger mines, and that's how the portfolios has transitioned over time. So today we actually, in 2017, now that I think about it, we are actually running 7 mines, all of which were in Mexico. 4 of those mines have now been shut down, and they're actually on the sales block. We're looking for partners and joint venture relationships on those non-core assets. There are 3 mines in Mexico. One is pure silver, 100% silver, and the other 2 are 50% gold and 50% silver. The nice thing about those 3 mines is they're all doré producers. So we no longer produce a concentrate like we did before. Then just this year, or pardon me, last year in April, we bought our first mine outside of Mexico in Nevada, a gold mine, 100% gold mine, also a doré producer in the state of Nevada called Jerritt Canyon. And that was pretty exciting. So we're now operating 4 mines, and hopefully that answered your question.
I know that Mexico is the largest silver producer in the world, and it's a stable jurisdiction. Do you think that it makes sense for First Majestic to just concentrate on Mexico and then geographically diversify a little bit back into the States, and also diversify the precious metal resource base from more reliance on silver to a little bit more in gold? Are they really the aims, to continue to concentrate on the largest silver producer in country in the world, but also to diversify slightly?
Well, there's a couple answers to that question, because there's a number of things pushing that string, or those multiple strings. One is political, risk or jurisdictional risk, and Mexico's not what it was 19 years ago when I put together the company. The current government is, very socialist, and mining investment has been dropping in Mexico for the last couple of years as a result of some of the policies that the current Mexican government is looking at. Fortunately, there's some big mining companies in Mexico that are, pretty entrenched, and it looks like the government's not going to be able to make some, any dramatic changes. But at the same time, it makes us think, what we should be doing as a business. And, as a largest private shareholder of the company, and my ultimate job is to protect the shareholders, and my call was to diversify and move into another jurisdiction, which we did. No, it's not to say that we're not looking at assets in Mexico. There's still a couple assets that we're actually seriously looking at acquiring in Mexico, which are really nice silver assets. But they just have to be the right asset. They have to be big. They got to be chunky. They got to really change the business and move the needle for us. If we could find a silver mine in Nevada or Canada or Australia, we would possibly even move into those jurisdictions. But it's really tough to find a good silver mine. Going to your other question about diversifying metals, we were about 90% silver in the early days, back in 2004 through 2007, and I could tell you, managing a business with one metal, even though I'm bull on silver, and I think silver is going to outperform gold over the next 5 to 10 years, but it's such a volatile metal. So, when you're doing budgeting, when we're doing budgeting as a management team, and we do a budget at $25 silver, and next thing you know, silver's trading at $20, all of a sudden we have to start cutting back drilling programs, cutting back investment, and then silver's back to $25 again. Then we have to start increasing investment, and it's just this back and forth, and it's very difficult to manage. And we've been doing it for, right from the beginning. But I can tell you that gold gives us that stability. Gold does not have that volatility. So we could actually run the business just on our gold production, and we could likely, warehouse all our silver. We wouldn't do it because, of course, we need the profits and we need the expansion capital and the exploration capital and so on. But, if push came to shove, if silver really did take a knock, which it has done a couple of times, and we've actually held back ounces from the market, we just survive on the gold.
Yeah, and I think if you could take that a little bit further, when you're diversifying from silver into gold, then if you step back and you look at the secondary producers of silver, the big companies that mine copper, lead, zinc, they have a different perspective again. Whereas you could say First Majestic is still in the precious metals space and everything to do with the pricing structure, which we'll get onto a bit further. Is very relevant. But do you think that the larger companies like Fresnillo don't really have a vested interest in really championing or lobbying for an improvement in the price discovery process because they don't see silver as one of their primary outputs?
Well, Fresnillo is owned by one of the wealthiest families in Mexico, and most of their money is from real estate and shopping malls, and they have this company called Fresnillo as a side business, which I don't think they really pay a lot of attention to, quite frankly. KPHM is a Polish government run company as well. So being a government entity, I don't think they really pay a lot of attention. So it's really the smaller guys like us that are the ones that are most vocal, because we're very focused on silver and gold, and then we see what happens in the marketplace, and we don't own real estate, we don't own shopping centers. So if some bank wants to come in and drive silver down by a couple of dollars over the space of a few weeks, it impacts us.
I'm really eager to get onto the price discovery or lack thereof, but I think if we could have a quick drill down into the physical market, because then it becomes obvious when you look at it that there is a silver deficit. There is more demand than supply, and there's a continuing deficit, and there are a whole host of components of the demand side which are accelerating. So the industrial side, the investment side. In your view, where is this going to lead to? Can a physical deficit persist, or is something going to give when some of those demand components just take off at the margin?
Well, I've said it before. I am a believer in the markets. I do think that markets eventually do become perfect. It may take time, and in the case of silver, where it's been such a manipulated market for so many years now, we're gone 3 decades of paper-driven trading, and the traders behind these trades don't really understand the physical market, because they don't really care, because all they see is the number on a screen, and they make money trading that number on this screen. And if they're able to think outside the box, or if they ever saw a headline saying that Tesla or Apple can't produce their products because they can't get enough silver, maybe they'd go, oh, geez, there's something really going on here. But they're looking back in the 80s when there was, well, even further in the late 60s, when the governments abandoned silver coinage and the government started selling all their silver into the market. And then the photographic industry went electronic in the late 70s and into the 80s. So you had another huge seller of silver. So there was an abundance of silver sitting on the surface of the earth in the 80s that took, really 30 years, or well, not quite, but 20, 25 years to consume in the form of electronics, computers, cell phones, and alike. All the electric gadgets that we take for granted that are helping us do this Zoom call today couldn't be possible without silver. So now we're in a complete flip of that, whereby there's no silver on the ground. The only silver that's sitting around is in ETFs, and how they make up the deficit. I still am questioning that. I saw an article that came out on SilverSeek this morning. My office sent it to me, and there's speculation that Bank of America is short 800 million ounces of silver. And so if you've got a bank of that size with a concentrated position like that, they don't want the metal to move because they can't afford it to move. So if that is true, it's pretty shocking.
This brings me to the whole concept of price discovery or lack thereof. So since around 2014, I've been writing articles about the gold and silver trading structures and literally the whole structure of the market in London and on COMEX. And I remember I noticed you at an early stage were very vocal in saying basically the same things as we've been saying at BullionStar for quite a long time. But you seem to be sort of a lone voice from a mining executive. Why do you think that other mining executives in the precious metal space aren't really calling it out for what it is? That the structure is literally unallocated credit, paper, synthetic, cash settled, and the volumes of trading are just so immense that it doesn't make any sense how it could be a proper price discovery.
Yeah, I think it's a lot of work. And a lot of people that run mining companies, I've said it 100 times, are geologists and engineers, and they're good at what they do, and they're not really from the banking system, which I am. I worked at 3 of the largest national banks in the trading department, arbing equities between Montreal, Toronto, NASDAQ, and Vancouver. So my whole background is trading for the banks. So I know how it works, and it's just my background, and it's just something that I'm very passionate about. I know the games that can be played, and I played many games myself when I was a trader on the floor, and it's just common. When you got a bunch of traders sitting around at desks in New York or London, and the traders at UBS, the traders at HSBC, or wherever the case may be, and you want to move something, whether it's a stock or whether it's a commodity, you get on the phone with your buddies and say, hey, let's do something. And they do it. It's just natural. These guys are making money. They don't even think whether they're doing something illegal. It doesn't even cross their mind. They just say, oh, here's a way to make some money. Let's go and do it. And they do it. And silver is being such a tiny market. It's so easy for them to move around. So it gets picked on a lot. And they do it, unfortunately. And every once in a while, they cross the line and they get caught, and fine goes out. And then the shocking thing is they keep doing it. They don't seem to learn by their fines, and I think that'll ultimately be taken. I think the physical market will just overrun them. And one thing that is encouraging to me, and I've just recently been talking about this, is what is the solution? How can we come up with a different pricing mechanism to take the banks out of the system? And I'm not sure if you saw the announcement that came out yesterday from Tesla, but I forget the name of the company, but they've just done a joint venture with a nickel company in the United States, whereby it's a Rio Tinto joint venture with another mining company, Canadian mining company, and Tesla's signed a contract to buy, I believe it was 75,000 tons of nickel from this company. Now, it's going to be based on spot. So the mining company is going to get the benefit of what the spot price is doing. But what it does, it takes that nickel away from the banks. So it goes straight from the mining company right to the end consumer. And that's what I'm pushing. Because if we could sell silver right to Tesla, right to Apple, and take the banks out of the system, there's no room for them to manipulate. So they can't, so the paper market would just implode because they've got no physical.
Yeah, we were always trying to do scenario analysis of what would happen in the event that the physical market overtook the paper market. And we came to the conclusion that the paper market would implode. So the pricing structure would just really cease to exist and the physical market would take off in a different direction. But given that the bullion bank cartel, so to speak, of the LBMA in London and the same banks control LPMCL, the clearing mechanism in London, and they control the COMEX. Do you think it's possible practically, or will these banks, are they so entrenched and so powerful that they would try and block any moves to disintermediate them?
Well, Apple's a pretty big company. It's the largest company in the world. And if Apple wants to go direct to a miner to buy metal, whether it's copper or silver or whatever the case may be, I can't see a bank stopping Apple.
Do you think that the physical market, if it did succeed in beginning price discovery, would need a sort of an exchange or a venue or mechanism or auctions?
Yeah, it's hard to say how it would evolve. Like if you look at the uranium market, there is a technically a spot price for uranium, but and you can find it on the internet. I forget where it is, but it is there. But uranium never trades at that spot price. It's always on a per contract basis, and it depends on location, delivery, timelines. There's a whole bunch of variables that go into pricing that uranium contract for that plant that needs the uranium wherever it may be. I'm not advocating that. I think that we're okay with that. A spot price of some kind. Like even if it stays on the COMEX, it doesn't really matter. But there won't be the paper. The paper won't have the influence. Like I'm not saying let's get rid of the COMEX completely. There still should be a way that an investor like you and I can go and play silver in the COMEX if we so choose. But those are small retail investors that aren't moving the markets. What I'm suggesting is it's the banks who have these big physical or pretty big paper trades that actually are affecting the price. And the only reason they do that is because they get supply from the miners. They know where the supply is coming from. So they use a hedge against the supply coming in, and they leverage it up to like 200 or 300 times what their position is. So and they trade off their positions. So and they know, so because if you're Sony and you want 50 million ounces of silver in 2022 to build your televisions, you're going to phone up JP Morgan or HSBC and say, I want this silver, and they say, okay, we'll sell it to you at $23 an ounce, and they say, okay, so that contract's now signed. So that bank now has to deliver that silver into that buyer over the next 12 months at the various ports around the world to produce those products. So it's in the best interest of that bank to keep the price within a reasonable range of that contracted price. And that's, if you eliminate that trade, and if it's the miner dealing directly with the consumer, all of a sudden that metal never hits the market. It goes straight into the consumer. So you don't have that derivative treatment ever written. You don't ever have the banks writing paper against that physical, because they never get it.
I noticed that First Majestic is no longer a member of the Silver Institute, and that you've never been a member.
How did you find that out? Because it's not even public yet.
Well, I just looked at the membership list of the Silver Institute, and
and they took it. Oh, interesting.
And it's not there now. And then I used the Wayback Machine, the archive.org website, to verify that you are a member last year, and I just saw that there was a difference. So hopefully I didn't spill any beans that hadn't been made public.
Yeah, I wasn't to where they took us off,
Oh,
but I did advise them last year that we weren't going to continue our membership. I've got a variety of personal reasons for that. I was actually contacted by them today, asking for a telephone call. So,
oh, really?
yeah, yeah. So
So you think you may be back?
we may be back. I don't know. We'll see. I just, I think the Silver Institute can do a better job. As simple as that.
Well, I was going to ask you about that. I don't want to probe anything to do with the relationship, but given that the Silver Institute and at the same time the World Gold Council are two bodies that you would think would be at the vanguard of helping to support efforts to improve price discovery, but neither seem to be doing so. Why do you think that is? Like they're miner member based. They get all their revenues from miners, or except World Gold Council gets a lot of their revenue from the Sparta Gold Trust now. But you would think that two bodies that are literally representing the biggest precious metals miners in the world would stand up and say, "Hey, the price discovery process isn't really doing anything for our members," but they don't, and that's very puzzling.
I know I was, it was about 10 years ago. I think I was in London. I was at one of the mining conferences, and I think pretty well every board member from the World Gold Council was on the stage, and forget who the moderator was, but and he asked the question of every one of the participants, is the gold price manipulated? And every one of them said, no, it's not. So when you have the World Gold Council's board of directors, saying to the world that gold's not manipulated, then it was pretty
Yeah.
shocking. I felt like standing up myself and saying a few words to them, but I refrained from doing that.
Seeing that we're near the anniversary of the silver squeeze, which really intensified in the last 2 weeks of January last year, it was something that really seemed to be on the cusp of a major breakout, but it didn't happen. And you could see the scurrying going on with SLV changing its prospectus, and that the CFTC was very interested. And then there was even a meeting with Yellen on the 4th of February last year, and I think the SEC and the New York Fed and the CFTC. So they were looking at the silver market with concern, presumably because they thought the price was going to break out. The fact that these US government entities were so concerned, what does that tell you about silver, that they're literally terrified that the price will break out?
Well, look, this story that came out this morning regarding Bank of America being short 800 million ounces, whether that's true or not, that's a big, big short position. That's a 1 year full supply of metal or silver. And then you read the Ted Butler stuff. There's lots of noise out there in this market. But for the chairman of the CFTC to go get on to CNBC and say that we've successfully tampered down the market because there could have been, I forget the words he used, but it would have been damaging to the system or something like that if we didn't step in. It was pretty shocking. I've never, being on the public side and being in the public realm as I am, being on a board of directors of public companies for all my professional career, for a regulator to come out and actually say that they care about price of anything is pretty shocking. Regulators are there to protect investors, from fraud and from misleading information and things like that. They're not there to stabilize a price of some trading vehicle. That's not their role.
Yeah, I mean, it just shows. I think it was Chris Marcus who found that, or else he put me. He highlighted that to me when he found out about that. But it is shocking. But given that it's from the same CFTC which closed down a silver investigation after 5 years in 2013 and said they didn't find anything, maybe it isn't so shocking. Do you think that silver is literally the Achilles heel of the financial system? Because if the silver price took off, then in some ways the gold price would have to follow suit. And if the gold price took off, that could really implode the whole system of the US dollar and the bond market. So sometimes I think of silver as the Achilles heel that they need to keep a lid on, because it's like the weakest link that could blow up the system.
I've asked the question a number of times of myself, and why has the silver price not moved? And because it really doesn't make a lot of sense. Silver is the only commodity that's not reached an all-time high.
Yeah.
It's on an inflation adjusted basis as well. It should, on the last run, it should have gone to, over $150 on an inflation adjusted level, which it never did when gold went to 1900. But nevertheless, look, I think it's going to happen. I coined the phrase strategic metal about a decade ago. I coined the phrase triple digit silver as well, which it sounds crazy, and there are more people that are jumping on that bandwagon because they're just looking at the simple supply demand fundamentals of the metal, and supply demand will take over. It cannot continue like this because unless we just stop producing electronics. If we just stop the world and stop electrifying the planet, stop going green and stop doing all the things that we want to do as a human race, or maybe a asteroid hits the Earth that's made of silver or something like that. I don't know, but there's no silver around, or not enough. The reported deficit in 2021 is somewhere around 300 million ounces. I haven't seen the final number yet, but that was a number that came out of the Silver Institute a few months ago.
Yeah, I was doing a quick back of the envelope calculation about the silver inventories that are in the LBMA vaults and the COMEX vaults. London claims to have 36,000 tons, but a lot of that presumably is still held up in ETFs. And COMEX has something tiny, like 11,000 tons, about 3.5 maybe in registered, the rest ineligible. And eligible could be nothing to do with the COMEX. It could be just in the COMEX vaults. So that sounds like it's just about a year's production. Well, even if you strip out the ETFs, it could be like 20% of 36,000. So you could have 7,000 tons in London, a few thousand tons in New York. That's nothing really. Do you think that there are strategic stockpiles in other places like China or Russia that people don't know about, in warehouses in India, that the banks know they can get their hands on, or are they really running on fumes?
Well, we'll probably never know. We do, a few things we do know. The Indians are buying a lot of silver right now, and it's becoming their favorite metal. On a dollar basis, they're actually buying more silver, I understand, than gold currently, which is interesting. The Chinese must have some silver, I would assume. Russians do have silver for sure. You probably saw the photograph. I think Chris Marcus also was responsible for putting this out. But when Putin went to the gold vault, or one of the gold vaults that they have, this was about 2 years ago, and he was holding up that gold bar, with a big smile on his face.
Yeah, I remember that.
If you looked at that photo and looked at the back wall was all pallets of silver.
Oh, really?
Which
I
is,
didn't know.
yeah,
I didn't know.
which is pretty interesting. So maybe you could find that on the internet somewhere. But I do remember that. I was like, wow, I wonder how much silver that is. So obviously the Russians have some silver as well.
Getting back to your point about the inflation-adjusted price of silver, last year I did a calculation based on shadow stats calculations, where if you even use the current CPI methodology, the all-time high of silver from 1980 would be $140. But if you use the pre-1980 methodology of the CPI, which is calculated by John of Shadow Stats, that could be even over $1,000 on an old CPI methodology adjusted basis. So do you think that we will see those type of figures if this physical silver market takes off?
Well, look, I'm big into the mining ratio. We're currently, and you probably heard me talk about it. When I put the company together, the mining ratio is around 12 or 13 to 1. It's now at 7 to 1. So for every 1 ounce of gold being mined worldwide, there's only 7 ounces of silver. Yeah, we're trading at 75 to 1. So that should be your base. And that's where the metal silver should be trading at, and it should follow that ratio, from a physical perspective, almost to the T. But you're going to get times where you're going to get overshot. You might see a 2 or 3 to 1 ratio at some point in a really extensive bull market, or in a bear market, it maybe go to 20 20 to 1.
Yeah.
But those are the kinds of ranges I think it should be trading at, not the current range. When in 2011 we got down to 32 to 1, I believe it was, and that's the lowest we've seen in the last 10 or 15 years.
I was going to wrap up with a few questions about, firstly, the silver bullion store where you offer physical bullion to customers. Is that something that is actually contributing to boosting revenue?
It didn't start like that. It started as a bit of a marketing gimmick. To be quite honest with you, we had at these mining conferences that we're going to on a regular basis. We'd have investors, shareholders coming up to us and say, "Hey, can give us an ounce of silver?" And so we started producing them in small quantities, and we're just handing them out to mostly shareholders. And then people want to start buying them, and then we started producing them. And in 2021, it was a record year for us. We did $10 million in revenues over our website, and we're making decent margins on the ounces as well. So we have a full-time people that now run that department within the company. It's become quite an exciting part of the business. I love it.
And do you have any plans to distribute out those products via other outlets, or will they be always directly from First Majestic to the customer?
Yeah, we've been contacted by other companies to a lot of European and Asian companies that they want to distribute our products, but it's really tough because the mints are really at their limit. The mints cannot produce any more metal or any more coinage, in the coins and bars. Everyone's, bursting at the seams. The refineries have some capacity, but unfortunately, First Majestic doesn't own the entire chain of the business. Long term, I would like to actually own a refinery and own a mint, and that way we could control the supply. If we could sell all our production through our own supply chain, we would avoid the other mints and refineries, and hopefully the banks as well.
I noticed that the two largest shareholders are Van Eck and Eric Sprott. Do you look at that as reassuring that that with these two stakes combined, that's 20% of the shareholder base, that you always have visibility that whatever happens, these two large shareholders will still be there? Well,
Van Eck is an ETF, so that's a passive fund. So the nice thing about being in an ETF is it brings you the volume, because they trade the stock every day according to inflows and outflows in their fund. So if you're not in an ETF, actually it's your cost of capital is up quite a lot. Like the fact that we're in an ETF and our volumes are so high, our cost of capital is super cheap. We're a very well-known name, very liquid. So, when we did our recent convertible debenture, we raised $240 million at 0.375%. That's 0.375%. 5-year money, 40% premium to the share price. If you're not in an ETF, you'll be doing that same financing at some rate probably north of 3%. So 9 times higher than what our rate was. So that's a good thing. Eric has been in and out of the stock. I've known Eric since the early 90s, and he and I have co-invested in a number of mining ventures. And so he's traded First Majestic very well over the last almost 2 decades. He came into the stock again a couple of years ago, and then he owned, his company owned the Jarrett Canyon mine. So he ended up getting a fairly sizable position in First Majestic as a result of that Jarrett Canyon acquisition. And he loves First Majestic. It's his largest share position. If you look on Bloomberg and see his entire holdings there, we're right at the top of the list for number one. I think something like $500 million his position was worth last time I looked at it. So obviously a sizable position, and we love having him on board. He's a great investor.
Yeah, we actually interviewed Eric a few years ago. One of my colleagues, actually now the CEO, Luke Chua, We were at a mining conference in Australia, and we got a chance to have a short interview with Eric, and he's definitely on board with everything we're talking about with the lack of price discovery. So I think I'd wrap up by maybe asking you, what are your plans for First Majestic in 2022, and would you be able to, or would you like to give a price prediction for silver and even for gold between now and the end of the year? Do you think they'll be higher or lower, or still pretty much the same?
Well, let's do the price prediction first. The I think we're going into a market crash, similar to the dot-com bubble that we experienced in 2000. We saw the Nasdaq peak out in March of 2000 at 5,000, and it went down 80%, over the next 3 years. That's what I think we're going to run into, and that lit up the resource sector, as you probably remember.
Yeah.
In 2002, 2002, silver was $5 and gold was 250. Yeah, and it may not look exactly the same, and it'll be interesting to see. But I think we're due for, you look at the Nasdaq, you look at the breadth of the Nasdaq, and a stat the other day came to my inbox. There's something like 50% of the Nasdaq stocks are at 52-week lows right now, and the only reason why the Nasdaq's not down further is because the core stocks that are in it are being stabilized by large hedge funds that want to hold the market up. That's all going to end, and and you never know. Predicting a crash is always kind of a foolish thing to do, because you really never know when it's going to happen, and you never know the magnitude as well. But I just think the gold market is so stable right now. It's been, people are saying, oh, gold underperformed in 2021, but sure, it was down a small amount, but it was solid as a rock. It had a very solid trading range, and I think gold showed its strength throughout 2021. And I think there's this pent-up bid that's coming into the gold market, and it may not arrive tomorrow, but I think by mid-year I wouldn't be surprised to see gold hitting 1,900, and by the end of the year 2,100, and I would expect to see silver. New highs for gold.
For gold.
Yeah, new highs for gold. 2,100 would be my prediction. And silver is always a tougher one. I'd love to say 30, but that might be too aggressive.
I noticed that you're also, as well as being president and CEO of First Majestic, you're also chairman of First Gold Mining, which is another Canadian mining company. So literally at this stage, you're not just Mr. Silver, you're Mr. Gold. You have two.
Well, hats. Well, look, I put together 3 mining companies, and First Quantum Minerals I put together in 92 to 94, copper company based out of Zambia, Congo as well. And then I put together First Majestic Silver in 2002, and then I put together First Mining Gold in 2015. And the similarities between each company was I was buying assets when no one wanted to buy them. And in 2015, there was, great assets, million-ounce gold deposits sitting there trading at less than $10 an ounce, and these assets had tens of millions of dollars invested in them, and some of them had market caps of north of $200 to $300 million during the boom, and we're trading at $15, $20, $25 million. And so over an 18-month period, I bought 8 companies and used First Mining as a vehicle and to do that. And I raised the capital, and we went out and took out 8 public companies, and ended up acquiring 11 million ounces of gold and spread over Ontario and Quebec. So I thought that was pretty good, and you couldn't do it today. There'd be no way you could do that today. But it was a lot of fun, and so I am the chairman of that company. I'm not involved in day-to-day. My full-time job is First Majestic, and that's not going to change anytime soon. Okay. To your point about, I didn't answer your other question about
the future of First Majestic. Yeah.
Right. So 2021 was a record year for us. Our guidance is coming out in about a week, so I don't want to say too much about 2022, but so look for that news. But 2021 was a great year. We ended off Q4 as an amazing quarter. 2022 is going to be another record year for us. Jerritt Canyon is going to be growing. Santa Elena is going to be growing. The other two mines San Dimas will grow a little bit as well. But the next 2 to 3 years, it's just going to be growth. We were spending, with the revenues that we've been accumulating, or profits we've been accumulating over the last 2 years, we're reinvesting this capital in exploration and development. And that is going to come directly into the mills, and because these mills are not at 100% capacity, and our whole objective is to fill these mills with 100% capacity by the end of 2023, which is going to get us close to 50 million ounces of silver equivalent production for 2024, compared to about 27 million silver equivalent in 2021. So it's not quite a double, but close, and
Wow.
that's our focus.
Wow, no, that sounds great. It looks like there's definitely a huge opportunity for investors in First Majestic between now and the next few years. So Keith,
just need the prices to hang. If the silver and gold prices can hang in there, it'll be a lot of fun.
I vouch that I'll try and do as much as I can to highlight the same issues as you've raised about price discovery, the LBMA, the World Gold Council. We've been doing that for a few years, and it's sometimes frustrating that the mainstream media never picks up on it, but I behind the scenes, I'm always trying to educate people like from the FT, the Wall Street Journal, Reuters, Bloomberg, but unfortunately they don't really take up the baton in a big way. It could be their editors, but we'll continue to try. So thanks very much, Keith, for your time, and maybe towards the end of the year we could have you back on and we could have a recap of what happened in 2022.
Sure. See if our metal price predictions come true.
Yeah, that would be great. Yeah. So thank you very much for your time.
Well, thanks, Ronan, and it's great meeting you.
Thank you.